Hey guys, welcome back to the channel. It's Sebastien Boyer, the approved guy. And on this video, we're going to continue our conversation with Tony Khait of EchoTax. And I started talking to Tony about building business credit and leveraging the business credit to purchase vehicles and some of the tax advantages. And so without further ado, let's get right into that conversation. Tony, thanks again for being with me. So let's get right into this. If someone has enough business credit, which I teach, and thank you for promoting the business credit in your EchoFile group of services. If someone is building their business credit and they get enough business credit, I've been able to help many of my clients purchase vehicles with that business credit. Now, some of those clients are using the vehicle for services like car rentals or like Turo, but I've also heard and I have other clients that are looking to not necessarily rent out the vehicle. So I just want to talk about the different use and basic, more or less, the maybe potential tax advantages depending on how you use the vehicle as well as the size of the vehicle. So if you could, I guess just first, let's just talk about if you're using a vehicle, if you buy a vehicle in your business name, but you're not using it to rent out or anything, and what are the limitations on tax deductions if that vehicle is in the business name, owned by the business? What are the benefits to that?
Yes. Well, I mean, one of the best reasons, the reason why you want a corporation or an LLC or have a business, right? Is to earn money, but also it allows you different types of business tax deductions. One of the advantages for business owners that I realize, everybody likes to drive nice cars, right? And it's personal use, but you use it for business purposes, right? So reality is you could actually get a business deduction for any car that you actually purchase or lease on the business name if it's for business purposes, right? What are the rules? If it's ordinary and necessary for your business, you're allowed to have a business deductions. So technically, anything that you spend your money on could be written off if it was ordinary and necessary for your business. So car is one of the biggest deductions that we usually do here for our owners or employees of a company that use for a business. The biggest advantage right now, if you have a car or SUV over 6,000 pounds and you financed it,
Mhm.
right? Not least, by financed it. If it's worth 100,000 or 150,000, you can deduct 100%. And I've done it for clients here at the firm, 100%. Assuming using it 100% for business purposes. Some clients use it 80% for business purposes. I'll deduct 80% of it for business purposes. How do you know what the percentage is? It's basic math. I mean, how many miles did you drive for the year? Well, I drove 10,000 miles for the year. How many of those miles were for business purposes? Well, 8,000 miles I drove for business purposes. Well, you take 8,000 divided by 10,000, so that's 80%. So 80% of all your business, your car expenses could be written off. There's two ways how to deduct stuff. There's actual method and the standard method. Now, the rules change every year. So what I'm telling you guys today, the law might change in 2023. Okay, so you want to always talk to your accountant every year to see what the law is that year. Okay, because if I'm telling you today, you can write off 100% of an SUV, where before it was limited to I think 25,000 maximum. Okay, because the law allows to do to stimulate the economy because of COVID and all that kind of stuff. So 2023, 2024, 2025, laws might change. Okay, for those kind of write-offs,
Right.
but reality is you can still write off a significant amount for your car expense as a business deduction as long as you're stating that you have. But you have to keep logs. If you ever get audited, IRS wants to see a log for every mile you drove that was business related. Okay. I did experience audits in the past where I said, you know what, the client didn't have a log, but they still gave me some kind of deduction anyway.
Mhm.
So because they know that for these kind of businesses, you need to drive around, especially if you're a salesperson driving from business to business, place to place. So it depends what industry you're in. If you're in the transportation business, regardless if it's 6,000 pounds more or less, right? Regardless of the kind of car, you could 100% deduct it. If it's for transportation business or whatever you do, it depends on the line of business, right? But a lot of cars that are 6,000 or less, they're considered listed properties, meaning you're personally using them.
Hmm.
So you got to just be careful of personal compared to business. And if you want to be on the more aggressive side, that's one thing. If you're conservative, you definitely, want to go by the book, keep logs, keep track of your miles, and deduct exactly what percentage wise you use for business compared to personal, and then you won't get yourself in trouble.
Excellent. Now, could a business owner rent? Let's say you have a vehicle that's uh, a revenue producing asset to the business that you might be renting out to different ways of doing that, right? Um, could you rent that vehicle to yourself personally to make to maximize the log time that it is actually used for the business,
Well,
as long as that's recorded properly?
you got to be careful how you structure it because if you're paying yourself personally, that means you have to pick up that income as rental income on your personal return, right? So you might get a deduction on the business side, but you're getting it personally. But yes, if you're renting it out to people, okay, you could deduct the whole asset, that year. There's two different ways to deduct. There's something called Section 179 that you can deduct, the whole 100% of the asset if it's for the asset for the business.
Mm-hmm.
And there's something called special depreciation, which is something new, that they came out recently with the last several years in these laws to stimulate the economy, to give business owners more cash flow so they can deduct things more upfront,
Mm-hmm.
give you less taxes to pay. Now you have more cash flow to your business so you can reinvest it and grow your business. So these are all different tax loopholes that IRS is giving you. So this way you have more cash flow for your business so you can pay less tax.
That's great. Now, besides vehicles, what other, I guess, popular um, tax write-off opportunities are there for business owners? I mean, I know there's like pretty much a lot of different things, but I'm talking about bigger ticket items like a vehicle. What other things can they write off? Property, if they own commercial property.
Well, there's a lot you can write off.
Mhm.
I mean, we don't have enough time today to discuss all the write-offs. We could. It's a course and a class that we could talk about for hours and hours and hours of different subjects. The biggest new thing that they're expiring this year, you're allowed to deduct meals 100%. Okay, they wanted everybody to go out to restaurants, right? So if you're taking clients out, to different restaurants, or your staff, you could before it used to be 50%. A lot of times 50% by meals, business purposes, 50% write off. Last 2 years, you could deduct 100%. So a lot of taxpayers don't even know about it.
So, do you know what it's going to change to for the
Back to probably 50%.
back to
We don't
50%?
know right now. The next month or two, there might be new tax laws coming out again because that's what usually happens. And maybe they'll extend it, maybe not. I don't know. We'll have to be determined. You
Hmm.
know what's expiring. Sometimes things expire. Sometimes they extend it. So we'll know the next month or two. I would say. But the biggest thing here at the firm, the biggest deduction I would say that the business owner would benefit is probably retirement plans.
Retirement planning.
Retirement plans, those are the biggest, that's what I do. That's what I specialize as being a CPA PFS, a personal financial specialist, and also licensed for 20 years as a financial advisor, Series 7, 63, 65, life and health insurance. So I'm a tax advisor as well as a financial planner and advisor to a lot of my clients. We have another division. We have a wealth management division that we manage millions of dollars for clients across the country. And how I grew my practice is advanced planning. 99% of the financial advisors don't do advanced planning. Only 1% does. I'm the 1% because PFS is a designation on the CPA, it's extension. It's like a tax expert CPA that specializes also in advanced financial planning. It's like Dr. became a surgeon, right? So we do advanced planning and retirement planning. There's more than 20 types of retirement accounts out there. These are big tax deductions that we could get in your business tax returns. And then, obviously that's your wealth. It's like what I say is you're moving your money from your left pocket to your right pocket, right? It's still your net worth, but
Right.
one pocket you pay tax, your right pocket you don't pay tax, right?
Right.
It's Sheltered. So you want to
Awesome.
move your money from your Social Security number, right, from that your personal tax return, that's one entity, to a different entity, right? To a trust that's holding, let's say, your retirement account, right? Or it's a separate entity, right? And it depends how it's set up. But there's so many different retirement accounts. But it depends on the situation. That's what account you might be eligible for. But more importantly, you're growing yourself wealth because a lot of these retirement accounts are tax deferred. All the money is earned inside, but just the tax savings, that's the wealth that you build. The market and anything you put the money in, that's a cherry on top of the cake.
Yeah.
That's usually what I present to my clients, and that's how we actually build Equitax on advanced financial planning. A lot of my small business owners, we give them this tax savings strategies and wealth strategies, to save them hundreds of thousands of dollars a year in taxes. Millions maybe over the years. It depends, your situation. Now, again, it depends on your situation, and that's when we sit down, look at your situation, and then whatever needs you might have, that's the solution we might provide to you.
That's incredible. So there, I mean, just based on this conversation, I'd love to have another opportunity where we can get together again really soon. Maybe in the new year, once the new laws have come out for the new year, and maybe we can really dive into that list of the different write-offs that business owners can take advantage of. Number one, and then also we could talk about the different types of retirement planning options and vehicles. You said there's about 25 of them?
Probably 20. It just
About 20?
depends. Yeah.
Okay. Yeah. Because I know most people only think about one, which is going to be like a 401k. That's the only thing that people are aware of. Right? Yeah, that's it. So, I'd love to personally learn more about all those different other avenues. I think it'd be a great opportunity to just educate the people on those different write-off opportunities as well as the retirement planning strategies, which at the end of the day, like you said, it's all about, putting more money in your pocket, whether it's shifting it from the right pocket to the left pocket, for the long run. But at the end of the day, saving money on taxes and building wealth. So I think this is a great conversation. And if you're up for it, let's plan on doing another one real soon.
Absolutely. Absolutely.
Awesome. Great, man. Well, thanks again. Everybody, the link to get in touch with Tony and his team will be in the description below. So make sure you take advantage of a free consultation. If you're a startup, if you're an existing business, maybe it's time to look at a new CPA. Maybe it's time to look at, some new strategies, short term, long term. We're not trying to promote or sell and pull you away from someone that you love and trust, but it doesn't hurt to compare. And hey, if the dollars make sense, then you got to take advantage of what makes sense, guys. Don't hold on to emotions. Act based on real facts, real information. And as you can see, Tony and his team, they're on the cutting edge of technology. They're on the cutting edge of the laws and the rules. So whatever worked last year is not necessarily going to work this year. And what's working this year is not necessarily going to work next year. So you got to make sure you have someone on your team who's like Tony, who doesn't just know how to write taxes, but is on the cutting edge. So with that said, thanks for watching. If you enjoyed this video, make sure you like, subscribe, and share. And we'll see you again real soon.